Dingity ding ding ding.
The world's largest casino just officially closed on today, Monday, April the 28th. And if you missed all the action, we violently went nowhere. In this video, I'll be breaking down all the news of why we popped and then dropped and then popped again. And more importantly, I'll be setting you up of what to pay attention to tomorrow. And I also want to call out some interesting levels that I really think are going to be important in the coming trading days in terms of the overall market. Hope that sounds good. If you enjoy these type of market breakdowns, don't forget to like, subscribe, all that good jazz. And with that being said, let's rock. When we were all finally able to put down our mice on the day, here was the official headline. S&P 500 ekes out fifth winning day as big tech earnings loom. So looking at the overall market, you can see that we pretty much closed right where we opened. Didn't really do much in terms of the difference from close to open, but intraday, it was a bit more hectic. We popped, we dropped, and then we had a big pop. And I'll break down why we had this sell-off, followed by the pop, but first you have to check this out. Even in the options market, they didn't know what in the heck was going on. Here's a look at the delta flow. Shout out to Spot Gamma, but anyway, you get to see the price action, and then here Spot Gamma gives you the 0DT options flow. That is more of the green teal bar, and then the purple/red one is all expirations put together. You can see even the options market didn't know what the heck was going on. Flat, then we dropped, then we tried to pop from 12 to about 1, then from there we dropped again, and then finally around 130 was when the market was able to find its footing. And as you can see, not only did price explode, but so did the options market. A lot of positive delta there. Calls being bought, puts being sold, and we pop. So clearly today could be split into two phases where we were bearish, then we were bullish, and the net situation was pretty much nothing. The SPY gaining 0.05, the Qs losing 0.03. We had some green tech stocks, we had some red tech stocks. It was very much a mixed bag. So here's the skinny on the situation. Things were bearish kind of about an hour into the day because of uncertainty of a potential new global conflict. Breaking. Pakistan's defense minister says a military incursion by India is imminent. Pakistan says it's normal armed conflict. Both countries should refrain from using nuclear weapons. This started to break right around market open, and when it became a bit more serious, that's when we really started to see some selling. And then basically a couple hours into it, when nothing really came from the announcement, as you can see, we started to rally. But we also started to rally on some legitimate trade, tariff war, whatever you want to call it, news. Treasury Secretary Bessent says it's up to China to de-escalate the trade tensions. The Treasury Secretary was with CNBC early this morning before the market opened, and he said a lot, but the main stuff you need to know is his commentary on China. The Treasury Secretary put the responsibility for reaching a trade agreement on China. Bessent added that many countries have put forth very good proposals on trade, and a deal with India could be announced soon. Keep that in your mind because I have another update of when he's going to be talking, so just quickly put a pin on that. But with respect to what's going on with China insists no tariff talks underway with Trump or Xi on top aids, despite the U.S. claims. China has again denied that it's in talks with Washington to resolve its trade war with the U.S. This is honestly getting comedic at this point. I think we're on the fifth or maybe even the sixth iteration of the U.S. saying, yes, we are talking, and China saying, no, we are definitely not. And neither side is changing course on their rhetoric, even though both sides are attempting to extend an olive branch, if you will, kind of cutting down their tariffs or maybe even hinting that they will. But for whatever reason, both sides are saying, the US is saying, yes, we are talking, while China is saying, never even heard of her. Anyway, kind of crazy, but ideally we get some resolution pretty soon. President Donald Trump and his aides have suggested trade negotiations are underway. Look, they both can't be telling the truth here. This is clearly a mutually exclusive type of commentary. Either you're talking or you're not, and I think it's really weird that this is continually going on at this point. But with respect to the other countries and the trade talks of the day, pretty good sign here. According to the White House, trade talks with the UK are moving in a very positive way. That's what we're hearing from India. That's what we're hearing from Japan. So I know that right now the US-China news is really what's driving the overall situation related to this tariff war. But don't forget, there's almost 200 other countries involved, and the other ones, we are hearing positive news. So with that in mind, in terms of key levels, if we continue to get that type of news, which I do believe believe we will. The first upside level that I'm personally going to be paying attention to, and I highly recommend you put it on your chart as well, is this upside gap fill to the low from Wednesday, April the 2nd at 5572, and then from there I'll be watching 5700. And then on the downside, I would highly recommend you pay attention to 5500 flat, because right now that's where we see a lot of protective positioning within the options market in the short term. So basically bullish above 5600, really above 5572, and then bearish below. In the short term, those are the major levels I'll be watching, and what could influence those is a whole heck of a lot of macroeconomic events. On Tuesday, April 29th at 10 a.m., 30 minutes into the trading day tomorrow, we're going to be getting the JOLTS job openings and the consumer confidence. And then obviously Wednesday, we're going to be getting GDP and inflation. Thursday, the normal initial jobless claims. And then on Friday, we're going to be getting the unemployment report. As in every single day for the remainder of this trading week, we have major macroeconomic reports that you have to pay attention to. And oh yeah, we're also getting 40% based on market cap of the S&P 500 reporting this week. So tomorrow, SoFi, PayPal, UPS, JetBlue, Coca-Cola, Pfizer, Royal Caribbean, Spotify. Also, after the market closes, Visa, Snapchat, Starbucks. And then on Wednesday, the big boys are going to be Microsoft, Meta, Robinhood, Qualcomm, and Caterpillar. And then the even bigger boys on Thursday, Amazon, Apple, and then on top of that, Riot, Airbnb, Reddit, McDonald's, CVS, Roblox, Eli Lilly. You got a ton. And then even some energy plays on Friday, ExxonMobil, Chevron, and then Fubo TV to boot. So like I said, this week, you're living it. Ideally, if you're watching this video in time, 40% of the S&P 500 by market cap is reporting. If they do well, look for us to explode above that 5,600, maybe even 5,700 target. If they don't do well, look for the market to definitely take a hit below 5,500. Pay attention to all this. Obviously, pay attention to all the major macroeconomic events. And then please don't forget, we have some political announcements. Tomorrow morning, 8:30 a.m. ET, Besant to join the White House press briefing. It is assumed that we're going to be getting some sort of update related to trade talks, either with India, Japan, maybe both. But once again, before the market opens, you got to pay attention to that. And then also in the afternoon, the Commerce Secretary, Lutnick, will be speaking at 2 p.m. So please pay attention to that. And then also, don't be surprised if we're going to be getting more general political commentary, because as of tomorrow, it is Trump's 100 days in office. Trump's first 100 days are the worst for the stock market since Nixon. Obviously, right now, it doesn't take a genius to realize that the market is trending down, but the pain might be over. I'm saying might, and obviously I have no crystal ball, but it's going to be clearly dependent on all those earnings, all those macroeconomic events, what is going on really with the trade war, and obviously how the market's going to respond to it. There's a very real chance that this is all over. The bottom's in, and we bounce off of this. Unfortunately, if the trade talks actually deteriorate rather than improve, well, then look for the macroeconomic reports to get bad, the earnings to get bad, and look for the price to sell off. I wish I could tell the future and tell you exactly what's going to go on, but right now it's a binary event. Either the trade talks are going to get better and improve and we all bounce from here, or they're going to deteriorate and we have a lot more pain. So that's exactly what you got to pay attention to in more of that medium time frame. But obviously for the remainder of this week, we have very important earnings. We have all those major macroeconomic events. And as early as tomorrow, we're going to get some very important political updates. So obviously, I hope you are watching this video in time. That's what I have for you now. Best of luck. I hope you're making a ton of tendies and you're ready to make even more. I hope to see you in tomorrow's show, 9 to 11, where I'm degenerately trading my own money. Obviously, bring all those good vibes with you. And until the next time, I'll see you later.